So Nellie Liang was just put forward by President Donald Trump to the Fed board. And I was just curious, given that she's a longtime veteran of the Fed, whether you could speak to what role you played in, recommending candidates to the president, giving input on who he should nominate. And then also, if I may follow up on the financial stability discussion from earlier, you've mentioned before that corporate debt is at high levels, and I was curious whether, you have any qualms about loosening up restrictions on leveraged lending by making that guidance less of a cudgel, I guess, while at a time when leveraged lending is gaining steam.
Okay, so in terms of nominations to the Fed, those are entirely, completely under the control of the White House and ultimately the president. And traditionally, the Fed chair has been consulted on those, and I'm happy to say that that has continued. But these are really decisions for the White House, and think of us as just being consulted. I will say that I'm very happy and excited about the team that we're putting together, and I'm very much looking forward to having those offices up and down our hall filled. It's been pretty quiet. More quieter than usual, which is saying something on the board hall. So we're looking forward to getting some people confirmed. In terms of corporate debt, so this is a I was an investor for a long time in areas that were very close to the leveraged lending market. So I have had a lot of experience, and that market has evolved really significantly since before the crisis. And the banks take much less risk than they used to. They're essentially in the business of distributing these loans and bonds rather than keeping them on their balance sheet to a much greater degree. But it's also true, and there's significant research on this, that excessive risk-taking in the leveraged lending markets does have channels for affecting the real economy if there's overheating and that kind of thing in those markets. So we monitor that carefully. Guidance isn't binding, as you pointed out. The leveraged lending isn't binding, and that's just the way that the law is interpreted. So it's something we're monitoring, and as I mentioned, we think overall vulnerabilities are moderate.